Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets. The effect of this action, in other words, will be to stabilize the dollar. Now, this action will not win us any friends among the international money traders.
In 1973, the wealthy Hunt family of Texas decided to buy precious metals as a hedge against inflation. The Hunts recognized the dangers of Nixon's decision at Rothschild agent Henry Kissinger's urging to close the gold window. The Hunts believed in hard money, and since the Hunts were billionaires, and at the time owning gold was illegal for Americans, the Hunts turned their attention to the common man's metal, silver, which didn't sit well with the central bankers who owned the printing press. The Hunts were targeted and made to pay for their folly, and eventually lost most of their fortune. The mainstream media constantly touts silver's all-time high as being $50 an ounce, which was reached in 1980 when the Hunt brothers cornered the silver market. So, how much money was $50 in 1980? Well, a movie ticket cost about $2.50, a first-class stamp cost 15 cents, and a gallon of gas was $1.25, while the median household income in the United States was $17,700. So, inflation means everything. Accounting for inflation is key when discussing silver. With that perspective, let's go back to the much-discussed $50 all-time high for silver. Just as a movie ticket in 1980 was $2.50, today a movie ticket is pushing $10. So too, the inflation-adjusted all-time high in silver is much higher than the oft-reported $50 an ounce. At today's silver price of approximately $21.50, silver is 57% below its 1980 high of $50. However, at $21.50 an ounce, silver is 85.5% below its inflation-adjusted all-time high of $138 an ounce. No wonder billionaire investor Jim Rogers often states that silver is still 85% below its high. To keep our perspective on the tremendous opportunity silver currently offers investors, we must remember, in 1980, when silver reached $50 per ounce, there was no derivatives bubble. There was no concern of fiat dollars flooding the world. There was no multi-trillion-dollar bailouts of Wall Street banks. And most importantly, there was no proven 100-to-1 paper manipulation of gold and silver markets.
Precious metals are financial assets, and like currencies and T-bills and T-bonds, they trade in the multiples of 100 times the underlying physical. They trade in the multiples of 100 times the underlying physical.
Silver is such an undervalued bargain, it defies belief, until you come to understand that the banks have suppressed the price with paper shorts and paper silver. Then, it makes perfect sense. At this very moment, we are living through dramatic historical events. Both gold and silver are now breaking the bonds of the manipulation that has long suppressed them. And silver, trading in lockstep with gold, is returning to its 5,000-year history as a monetary metal. The gains investors have made to date have been stunning. But as the bankers are forced to cover their short positions and the true value of these precious metals is once again rediscovered, the pricing moves for gold and silver that lie in the years ahead will be talked about for generations.
Central banks are printing more money than they ever have. So what's the value of money in terms of purchases of goods and services? I look at gold as just another currency that they can't print any more of.
Duh. Right. I mean, it's a currency risk. And gold and silver are a currency. That's the key concept in that phrase. In other words, it's not a commodity. It's not speculation. It's a currency. It's been out of favor for 20 years. Now suddenly it's coming back, and it's reasserting itself as the store of value that it has been for 5,000 frickin' years. Since the 40 years of paper money experimentation after the collapse of the gold standard in 1971 is over, and as Mark Faber has said, you still got 70–80% of the big players around the world are heavily invested in dollars. So even though the euro looks kind of weak, not many folks really own the euro compared to the dollar. The dollar is really the piñata that's going to get whacked and whacked and whacked again, and driving gold and silver to ungodly measures of price
Should we return to the gold standard that Richard Nixon abandoned back in 1971, if you remember Bretton Woods? What's your take on whether or not we should return to the gold standard?
Well, it couldn't be really the gold standard because there's simply not enough gold out there to really represent all the fiat currency we have floating around in this world. What it's doing right now is really causing concern globally for the U.S. dollar. So, you know, while I agree it would be great to anchor the dollar to something to kind of
Okay, so forget gold
the
for a
U.S. from
moment.
spending, that would be very helpful. But
okay, so
I just think it's going to continue to weaken.
Realistically, you say gold's just not going to work because there's not enough gold out there. But if we were to
That's
anchor
right.
it to something, do you think that's a healthy thing?
Well, it would be helpful killing the dollar.
I think it's a myth that you can't go back to gold. I think that you could go back to gold. You would have to freeze the expansion of the monetary supply immediately. You would have to allow gold to be freely traded for some period of time. And then when you have a more realistic, more stable price, you can reestablish convertibility. But yeah, even if you do think that there are transition issues with that, I'd say pick a basket of currencies, whatever you think is going to be stable in terms of its real value, and anchor the dollar to that with a price rule that requires the Federal Reserve to maintain the value of the dollar in a certain band. I think they would have a lot less discretion than they have now.
Yeah, what you're really talking about, of course, is the expansion of the money supply. That's what worries you, and that causes the value of the dollar to fall. Aren't you, though, slightly missing the point? Hasn't America, as most Western societies have become prosperous, specifically because you let the banks lend money to generate extra money supply? It's what makes businesses strong. It's what made the American consumers so big. It's what has driven this economy for years and years and years. It lies at the heart of what America is, surely.
Well, look, you're going to have lending in a gold-based monetary system. We did for many, many years before we went off the gold standard. So I don't think that that is precisely the issue. The issue is that when you have a fiat currency and you can inflate the money supply, there's no real check on government deficit spending, and that's why we have these enormous deficits right now. If we had a gold standard in place, there would be a huge gold outflow that would make those deficits unsustainable, and that would rein them in. There's no check right now.